Have you ever looked at Bitcoin's price and thought, man, I missed it? That feeling is more common than you'd think. People thought they missed it at $1,000, then again at $10,000, and yet Bitcoin keeps coming back, surprising everyone with new highs. Right now, some experts are predicting that Bitcoin could reach $150,000, and not in some distant future, but sooner than most people expect. This isn't about hype or hope. It's about trends, numbers, and very real shifts happening in the global financial system. So today, we're counting down the 10 most realistic reasons why Bitcoin could hit $150,000 a lot faster than you might think. And just before we start, if you like straightforward explanations that help you make smarter decisions, make sure you hit that subscribe button so you never miss a video. Let's get started. 10. Bitcoin's supply is shrinking fast. Bitcoin is built on a simple idea: scarcity. There will only ever be 21 million Bitcoins in existence. That number can't be changed. But here's what many people don't realize. Over 3 million Bitcoins are already estimated to be lost forever. Mostly because early adopters forgot their wallet passwords or threw away hard drives. That leaves less than 18 million coins available. And of those, a large portion is held by long-term investors who rarely sell. Now, in April 2024, the latest Bitcoin halving occurred. That's when the reward for mining Bitcoin gets cut in half, from 6.25 Bitcoin to 3.125 Bitcoin per block. This happens every 4 years and reduces the number of new Bitcoins entering circulation. The result? New supply dries up just as demand is heating up. In past cycles, this has always led to massive price increases within 12 to 18 months. 9. Institutional money is pouring in. In the early days, Bitcoin was dismissed as internet money for tech nerds, but today it's being embraced by some of the largest financial institutions in the world. BlackRock, Fidelity, and ARK Invest have all launched Bitcoin ETFs in the United States. These ETFs make it easier for large investors, including retirement funds and hedge funds, to buy Bitcoin without dealing with private wallets or crypto exchanges. The approval of these spot ETFs in early 2024 was a major turning point. Within weeks, billions of dollars flowed into the market. BlackRock's iShares Bitcoin Trust alone crossed $15 billion in assets by mid-2025. That kind of institutional demand creates a solid floor under the price. And if these large players decide to increase their Bitcoin exposure, even by a small percentage, it could drive the price up fast. 8. Global debt is out of control. Around the world, governments are drowning in debt. The United States alone has crossed $35 trillion in national debt. Japan, the UK, and several EU countries are facing similar challenges. To manage this debt, central banks often resort to printing more money, which weakens the value of fiat currencies over time. People are starting to look for a safer store of value. Gold used to be the go-to, but now Bitcoin is stepping into that role, especially with younger investors who prefer digital assets. Unlike dollars or euros, Bitcoin can't be inflated away. Its fixed supply makes it attractive as a hedge against economic instability. And the more unstable things become, the more likely Bitcoin is to surge. 7. Countries are buying in. Here's something that would have sounded crazy 10 years ago. Some governments are now adding Bitcoin to their national reserves. El Salvador was the first country to make Bitcoin legal tender in 2021, and they've been steadily buying it since. As of 2025, El Salvador holds over 5,800 Bitcoins. Other countries like the Central African Republic have followed suit, and there are rumors that more developing nations, especially those with unstable currencies, are quietly buying Bitcoin as a way to diversify their reserves. If just a handful of these countries begin treating Bitcoin like a digital version of gold, it could create a major surge in demand. 6. Bitcoin ETFs are just getting started. As mentioned earlier, Bitcoin ETFs have opened the floodgates, but what people don't always realize is that we're still in the early days of this trend. Right now, US-based spot ETFs are only accessible to investors in certain accounts. As regulations evolve, these products could be offered inside retirement plans, pensions, and even 401ks. Globally, countries like Hong Kong have also approved Bitcoin ETFs, and others are expected to follow. Once these products are available across major markets, we could see trillions of dollars in managed funds start to include a small allocation to Bitcoin. Even 1% would be huge. When that happens, the demand will be way higher than the supply. 5. Bitcoin is being treated like digital gold. Gold has always been seen as a safe asset during uncertain times, but Bitcoin is starting to take its place among younger investors and tech-savvy institutions. It's faster to trade, easier to store, and can be moved anywhere in the world without a truck or vault. In fact, some analysts are comparing Bitcoin's potential market size directly to gold. Gold has a total market value of around $13 trillion. If Bitcoin captures just 10% of that, it would mean a market cap of $1.3 trillion, which would put Bitcoin at around $65,000 per coin. And that's just the beginning. If it reaches 25% or more, that's how you get to $150,000 or higher. 4. Big tech is getting involved. Companies like Tesla, MicroStrategy, and Block, formerly Square, already hold Bitcoin on their balance sheets, but there's more going on behind the scenes. Apple, Google, and Amazon haven't publicly announced Bitcoin holdings, but they're all investing in blockchain research and digital wallet infrastructure. The moment one of these giants openly buys Bitcoin or accepts it for payment, the market could explode. We've already seen what happens when just one company, like Tesla, buys in. Back in 2021, when Tesla revealed it had purchased $1.5 billion worth of Bitcoin, the price jumped by over 20% in just a few days. Imagine what would happen if more tech companies followed suit in 2025 and beyond. 3. Public trust in banks is fading. After several regional bank collapses in the US in 2023, like Silicon Valley Bank and Signature Bank, a lot of people started questioning the safety of their money. Even with government bailouts, confidence in traditional banking has taken a hit. Bitcoin doesn't rely on banks. It doesn't need middlemen. You can hold it yourself and no one can freeze or seize it without your permission. That kind of control is becoming more attractive, especially in a world where banks are starting to feel less reliable. As trust shifts away from banks and towards self-custody assets like Bitcoin, demand will only grow stronger. 2. Bitcoin is becoming easier to use. One of the biggest criticisms of Bitcoin used to be that it was too complicated. People didn't want to deal with private keys, hardware wallets, or confusing exchanges. But all that is changing. Apps like Cash App, Robinhood, and Coinbase have made buying Bitcoin as simple as tapping a button. Even PayPal now lets users buy, hold, and spend Bitcoin. Meanwhile, Lightning Network, a Layer 2 upgrade, is making Bitcoin transactions faster and cheaper. This means you can use Bitcoin for everyday purchases, not just as an investment. As the tech gets better and the experience becomes more user-friendly, more people will get involved. That broader adoption means more demand, which pushes the price up. 1. Market cycles and momentum. Finally, history matters. Bitcoin moves in cycles, usually around the halving events. Every time a halving happens, we get a supply shock. And historically, the year after a halving sees the biggest price jumps. After the 2012 halving, Bitcoin jumped from $12 to over $1,000. After 2016, it surged from around $600 to $20,000. After 2020, it went from $8,000 to nearly $69,000. The latest halving happened in April 2024. That means if the pattern continues, we're in the early stages of the next big run, one that could peak in late 2025 or early 2026. If we follow the same historical growth percentages, hitting 150,000 isn't a long shot. In fact, some analysts are calling it a conservative estimate. So what does all this mean? It means that Bitcoin's next big move might already be underway, and most people still aren't paying attention. Whether it's shrinking supply, growing institutional interest, or fading trust in traditional finance, the forces pushing Bitcoin higher are stronger than ever. $150,000 might sound like a big number now. But if history repeats itself, we might look back and realize it was just another stop on the way up. If you found this video helpful, give it a like, share it with someone curious about crypto, and don't forget to subscribe to the channel for more content like this. The future of money is changing, and it's happening faster than most people think. Stay informed, stay sharp, and we'll see you in the next one.